I'm about to tell you the biggest money siphon to watch out for in the entire dealership. And no, it's not the salesperson. It's the finance office. Most buyers have no idea the real damage happens after they think the deal is already done. I spent over a decade in the car business, and I'm about to show you one of the most common ways dealerships make thousands without you realizing it. Here's the trap. Most people walk into finance thinking, I'm just going to turn down the warranty, gap, maintenance, sign the paperwork, and keep my payment where I agreed. But what most people don't realize is they've already overpaid before they ever sit down in the finance office. And it all starts with the sales manager manipulating your interest rate. Dealerships get what's called a buy rate from the banks they work with. That's the rate you actually qualify for when they pull your credit. Now, let's say the bank approves you at 5%. You'd think that's the rate your payments are based on, but it's not. A sales manager will structure your payment using a 10 or even 12% interest rate and present those numbers as if they're normal. The inflated rate gets baked into your monthly payment before you ever see the numbers. If you agree to one of the payment options right away, they make a fortune. If you don't, the negotiation starts. You say the payment is too high. They ask for more money down or try to stretch the term to 84 months. You push back until they finally ask, where does the payment need to be to earn your business right now? You tell them, lower it by $80 with no money down and I'll buy. They come back with a payment exactly $80 less, and you think you negotiated a good deal. But here's what actually happened. They simply lowered the inflated rate they started with until the payment you agreed to was reached. The out-the-door price didn't change. You just negotiated against a padded interest rate. And yes, you unknowingly got hustled out of thousands. This happens every single day. If your real approval is 5% and they contract you at 7%, that 2-point spread can cost you thousands over the life of the loan. For example, on a $35,000 loan for 72 months, a 2% markup adds just over $30 a month and costs you about $2,070 extra over the life of the loan. That money goes into a finance reserve account and becomes dealership profit. Now here's where it gets even more shady. Finance managers often use part of that reserve profit to make products like warranties and gap look cheaper by offsetting the payment increase. They can do this because the reserve is already hidden in your payment. If you decline the warranty, gap, and everything else, they're not dropping your rate back to the 5% you actually qualified for. No, they'll contract you at the highest sell rate the lender allows. And whatever extra money is still baked into your payment gets slurped into the finance reserve account. If there's still leftover room in the payment, you'll see it reflected as a slightly lower monthly payment than you originally agreed to. It feels like you got a deal, but you lost, and lost big. So how do you protect yourself? Get financing in place before you go to the dealership. Shop around for the best rates. Apply online. Use your own bank or credit union. Personally, I like RBFCU. They're competitive and transparent. You do need to become a member, but opening a checking account handles that. Financing a vehicle through a dealership without a pre-approved rate is a reckless gamble with your money. Walk in with a pre-approved rate. Now you have a baseline to compare against. Give the dealership one shot to beat it. If they can't, use your own lender. That one move will almost always save you thousands. And here's another pro tip. Before signing anything, use a payment calculator on your phone. I like the Loan Calculator app. Enter your out-the-door price, loan term, interest rate, and down payment. Verify the payment yourself. If the payment doesn't match the math, something's wrong. Don't sign until the numbers are correct. Plain and simple. Look, the finance office is where dealerships make most of their profits, but only if you let them. Now you know one of the most common money siphoning tactics in the business, and exactly how to shut it down. If this helped you, hit like, subscribe, and follow for more insider dealership tactics they hope you never learn. I'll see you in the next video.